on this computer. All right, recording has started. Video, share the screen.
All right, I'm gonna admit Donna.
All right. All right. Good evening, everyone. Hope you're all doing well tonight on our December edition of our 15-minute webinar series. Tonight, we're going to cover managing debt and kind of understanding the benefits of it, and kind of, really where to take it from. I do have Kate Flowers here today. She's my co-host, and she'll be monitoring the chat. So feel free if you have any questions to throw them into there. And then also at the end, I will be sending out an email, which will have my contact information and a way for you to reach out if you have more questions. As always, this is a safe environment, so please ask questions. If we're all here to help and learn and help each other. And without that, I will jump into it. So when we think about managing debt, there are a lot of us that have it. It is not something that is, something you're really happy to talk about, but it's something to talk about. And the reason is the more that you talk about it, the more top of mind it is. And really, it'll help you kind of understand its progression as you pay it off. Hopefully that's the plan. Sometimes there are people that have debt and their only goal is just to stay afloat. And if that's you, I would recommend considering maybe really choosing something different, because, when we think about it, you don't really have, you don't have debt. Your money can do anything you want it to do. And what that means is, more than anything, I hate when all of a sudden, I get paid and then half my paycheck has to go to paying something I already enjoyed in the past. And I always tell people not to put too much faith in future you, right? We don't know the future. If we did, we wouldn't have to save anything. If I knew the next time I was going to get a flat tire, if I knew the next time I was going to be sick, I would never have to save a single penny more than I would need. But we don't have that, and we don't know the future. And so this is why sometimes debt creeps up on us. Sometimes we've had an unforeseen circumstance, and it's not to beat yourself up. You can't control everything, but there are things you can control. And when you think about your budget, you have to definitely make sure that you can control certain things about it. Some of it's overspending, but there's nothing more discouraging than getting your whole paycheck and pretty much paying it off to debt, or just paying off the minimum. So, what is one to do? Well, let's first look at kind of how it affects all of us as a whole, right? So the reality of debt is, on average, we have about $38,000 of debt. And that's over 75% of all Americans that are in debt. And I did break it down by age group so you can see kind of where the borrowing is. And you will see a drastic decline with Gen Zs, or the younger generation, because a lot of them are terrified. I mean, they're terrified to get into debt. They've seen it. They've heard it. They really have learned from their parents, maybe the Generation X or baby boomers that have rocked it out. And then you look at the millennials, which is my age group, has the largest the amount, and not by a large amount, but they do have the largest. And that's because there was a lot of regulations that changed during my generation as far as how credit can be advertised. When I was in college back in 2004, when you went to some of these events, you get enticed by like free pizzas and sign up for a credit card. They had an annual fee, or had to have a balance on it. And so you had predatory practices that not at the time were not considered predatory, but they have been looked upon in Congress and passed through regulations to protect it. But you can see the regulation change essentially. So either A, it was Generation Z's being taught by the millennials and Gen Xers about not being in debt, them being scared of it, or the regulation that helped prevent it. I personally think it's all of the above. However, when we look at, again, the average American has $38,000 in debt. So first off, we do have to cope with it. It's like accepting for what it is, because when we think about denial, or not even think about it, it just kind of goes to the wayside. So if the more that you cope with the debt, and if you're having trouble paying your bills, or maybe your accounts are being turned over to collector, it happens. Have you ever been worried about losing your home or auto? Have you known someone that's been worried about losing their home auto? It's stressful. And some of these situations are not avoidable. Like I said, unforeseen circumstances like medical care issues, maybe car repairs, maybe you have to move out of town. There's a lot of different things that can change your budget or your spending, and put you into that red zone. And it could take you years, but you're not alone. Again, we have a lot of Americans that have debt. You'll find that facing a financial crisis at some point in their life, And it can occur from a personal family illness, loss of job, or even overspending. A lot of times it does start with the credit cards. I don't want to say it's the pathway to it. When we think about credit cards, the best way to keep out of debt is by only having one. And it's not saying close down your lines of credit. You definitely want to remain those open, because on your credit, that does give you a boost when you have available credit versus what you're using. But only use one card. When you start spreading out your purchases on store cards and other things like that, it becomes harder to see it. And next thing you know, you're going to pay your bills, and here comes payday, and your paycheck's gone because you had 4 or 5 credit cards minimum due. Um, in in next month's presentation or adulting webinars for January, we're going to go over consolidating debt. So some of the techniques about consolidating it and making it a little bit easier to manage, either bringing it to one loan and having a lower monthly payment to free up cash flows to bring back a quality of life, or free up cash flows to pay down, but coping with it. And what I mean by that is making it something that you think about regularly, right? Don't put it in the back of your mind. Don't send it to the back burner. Think about it and really sit down and tell yourself that you're sick and tired of it. And if you are, start making a process. Well, where do you go? A lot of the times it's the basics. When you think about developing a budget, knowing about where your money comes from and where it's going is definitely huge. The first grip on being out of debt, because that'll allow you to see what you have extra left after your bills are paid. So you have your disposable income and what differences, but you really have to think about what the victory looks like. When you create a budget to set down and pay down your debts, and maybe you're not drowning, maybe you just got more debt, maybe you got a few $1,000s for the credit cards you're just not happy about. Well, set up a plan. There are minimum payments on your credit card, but a lot of them, the interest being minimal, you can always estimate that and set up a plan. Like, oh, I want to have this $3,000 paid off in 12 months. I got to pay X amount of dollars to get it there, and then do it. You can also use your financial technology, like your automatic bill pay. It can transfer a specific dollar amount, so you can set yourself up for it. So you can really make that difference by creating the budget. But if without one, you won't see what you have left over to do that. And I always tell people, give every dollar a job. That doesn't mean to do the zero-based budget where you're accounting for every single dollar, but the money you have left over. Generally, when I pay my bills, if I have money left over, I take an additional 20% and throw it into my savings account. And it might not be much. Maybe it's only $100, but every little bit counts, and it does add up. And when we think about the budget, that's the best place to start, because I really understand where your money flow is going, or maybe even help outline where the problem stems from. The next one is contacting your creditors. You want to make sure you contact your creditors, because a lot of them, if you're in communication with them, they won't harass you or they won't call you on the regular. A lot of times I will tell people to call your creditors before you become past due. So if all of a sudden your finances are coming to struggle, you don't have enough cash and you can see it coming, call them before. Because if you call them before, there's a lot different options that in-house these financial institutions can help you with. They can set up special payment plans. They could even suspend payments, maybe give you forbearance. But when you wait till after it's due, there's different things that come in. Generally, there's a lot of regulations federally that mandate certain ways that financial institutions have to act, in which case it's taken out of our hands. So you don't get that nice warm touch, and you don't get that personal feel that you normally get from your financial institution. So always talk before. Be upfront. If you're borrowing money from a friend and you're gonna pay them back at the first of the month and you can't, tell them beforehand. And same thing with your creditors. Believe it or not, it does make a difference. The same thing with dealing with debt collectors. If you know you can only afford $10 a month on a debt, throw it out there. Maybe they'll accept it. A lot of places have different dollar amounts they write off, where they're required to collect a certain percentage of each dollar. Some places it's less than 10%. So you might owe them $1,000, and you say, I'll pay $10 a month for a year or two, or whatever it comes out to being, and they might accept it just because of the fact of what they can lose based upon their business. Because when it goes to a debt collector from a creditor, they already bought that account, so they own that money, and they settle on different things. They didn't, if you had $1,000 that went south at a bank and they sold it to a debt collector, the debt collector did not buy it for $1,000. They probably bought it for significantly less. In which case they're willing to settle for less. But again, being in contact with them and call them, that goes the same thing with your student loans. If you're suffering from student loans, definitely let them know. They can give you 6 to 9, even 12 months forbearance with just by asking. So if you're feeling tight, definitely call your people beforehand instead of after. And then managing your loans. If you have loans that are significantly outpaid, or their payments are high, call up your financial institutions before it comes due and see if they can refinance into a lower payment. just because you're paying interest isn't a bad thing. Sometimes we're borrowing time or we're borrowing things now, and we're going to pay a small part interest. It's the price to pay. So don't always get chewed up on interest rates. Think about what's more important. A lot of times when people are in debt, what's most important is cash flows. When you free up cash flows, you might not save 100% of those freed up cash flows, but man, you will definitely sleep a little better at night knowing you have a little bit of cushion in your checking your savings account, or maybe be just slightly increase the quality of your life. But really, if you free up cash flows, do something with a percentage of the extra so that you can get out of that cyclical cycle of living paycheck to paycheck or always having that debt. Um, and that goes to say, if you're gonna have to put some tires from your car, actually you need new car, tires for your car, and you put them on your credit card, and it's gonna take you 4 or 5 months, that's fine. Just stick to it. And if you fail one time, maybe not consider doing that way in the past, because again, that's what people do is they put it on a credit card and they didn't pay it off, and then something else comes that they put on the credit card. And again, these are things that we can control. There isn't much you can do with unforeseen circumstances like medical. You pay it off, still call your debt collectors or creditors to be on point, or at least to make sure that you're not just not answering the calls anymore. But the things that you can manage, like buying stuff for Christmas or during these holiday seasons, or traveling, live within your means, because you will regret it later. You've never once had debt and been like, man, I'm so glad I have that. And so this is why we come managing. So for debt consolidation, if you are already in the pool of debt and you're really kind of having a struggle still, there are places that are beyond financial institutions, but there are a lot of scams out there. So when we look about debt consolidation, if it's not like with it like Arbor or your financial institution, and it's like you get like Freedom America is one I hear on the radio often. Be wise of those. And I'm not saying that one specific company is bad, but debt generally, your attorney general for the state will back these debt relief services, right? So the DRS. So you have the attorney general, and then also you can do the Better Business Bureau. Local Consumer Protection Agency is also another one. So if you're gonna choose a debt relief service, which is generally beyond the bank, so banks can only do so much because of regulations. But if it's still more significant than that, reach out to a company. We rely on GreenPath, which is a local Southwest Michigan company. We've partnered with them for many years. I'm sorry, not 4 years, but for many years. And they are backed. They are wonderful. They are a free debt relief service company. So there are ones that charge, and I'm not saying the ones that charge are bad. Some of them, it's a significant amount, but sometimes it's a small percentage of what your debt is. And so, like, let's say you got set up in a payment plan for 48 months, the first 2 or 3 payments would go to that company because they help settle and consolidate debt. And then as long as you make those payments on time, you're paid off. And those aren't bad. Sometimes I can't really tell you the exact difference, but as long as they're backed by the attorney general and the LCPA, you're going to be good. But we recommend GreenPath because they're a great supporter of us. They also have a lot of resources that will make things a lot easier for you. So think about debt as understanding what it is, thinking about the victory, like if you didn't have to pay the debt, what would you do with that money? Making a plan to pay it off, even if it's hard or it's going to take long, just stay on point. If you do end up paying off significant debt or any debt in general, you don't generally feel bad about doing it. You probably feel pretty good. So just remember what that victory looks like. And then if you're past that, do consider something like GreenPath or doing that. The more that you let it go south, the more that you turn your back to it, it's essentially not going to get any better. It's going to get worse, or at least it's not going to go away. I know that I feel better when every time I can pay off my credit card in full, or even if it takes me a month or two to pay it off, it always feels great. So that's all I have. I do want to thank you for tuning in today. I wasn't sure if there was any questions in the chat. And if not, like I said, what I will do is I will send out an email from me. When you guys registered for this class, I got your email. So I'll send you an email with a link to this video so you can refresh back to it. And also an opportunity, if ever there's anything I can do for you, whether it's a personal question or a one-off, even if it's not about debt management, please feel free. I'm a good resource. I've been in finance for about 12 years. I've seen a thing or two, not everything, but I have seen some things. And then again, next month, we're going to go over debt consolidation. Debt consolidation will be the idea of freeing up cash flows and how to kind of best utilize those flows into making your life either higher quality or even paying down debt and creating a different plan. So that's all I have. Thank you so much for tuning in, and I hope you have a wonderful afternoon or rest of your evening.